morning, you're watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. As widely expected by analysts and economists, inflation quickens to 4% in March.
Foreign business groups call on the government to issue the implementing rules and regulations of the Public Service Act and the Foreign Investments Act before President Duterte ends his term in June.
Time to gas up. Oil companies are rolling back their fuel prices starting today.
And the Health Department is on guard against Omicron XE, but the agency says the COVID-19 subvariant is less infectious than the original variant. We begin our broadcast with foreign business chambers urging the government to immediately come up with the implementing rules of the recently signed economic reform measures.
The chambers are also calling on government agencies to ensure that stakeholders are properly consulted about the rules and regulations of these laws. Now, the Joint Foreign Chambers want the administration to issue the IRR of the Public Service Act and the Foreign Investment Act before President finishes his term in June. The group says the prompt issuance of the rules would fast-track the gains expected from these laws to the benefit of the public. Recall that last month, President Duterte signed the amendments to the 85-year-old Public Service Act, which allowed full foreign ownership of key services such as telcos, domestic shipping, airlines, and railways. He also signed the Foreign Investment Act, which aims to make the Philippines more attractive to foreign investors. Foreign business groups have been pushing for the passage of these laws together with the amendments to the Retail Trade Liberalization Law. NEDA will be the lead agency in drafting the rules, and Secretary Carl Chua says they will soon announce as to when the consultations will start.
Heads up, motorists, now might be the time to gas up. Major oil companies are implementing another rollback in fuel prices today. Prices of gasoline dropped by 2 pesos and 30 centavos per liter. Meanwhile, diesel prices are down by 1 peso and 85 centavos. This decrease comes as the United States vows to release 180 million barrels of oil in the next 6 months. Another reason includes signs of possible resolution on the conflict between Ukraine and Russia, as per the Philippine Star. Meanwhile, the disbursement of fuel subsidies for PUV drivers has been temporarily suspended by the LTFRB as the election spending ban takes effect. The distribution was suspended last March 25th, pending a resolution from the Commission on Elections. LTFRB Executive Director Maria Cristina Casion says around 110,000 of the over 260,000 beneficiaries have received the 6,500 peso cash subsidy.
As widely expected, inflation accelerated to 4% in March. This is near the upper end of the Bangko Central's 3.3 to 4.1% target. The March print is quicker than the 3% inflation print in February, but still slower than the 4.5% inflation seen in March 2021. The main drivers of last month's faster inflation were quicker price accelerations in food and non-alcoholic beverages. Other major contributors were prices of housing, water, electricity, and gas, as well as higher transportation costs propped up by soaring pump prices. Year-to-date, prices increased at a rate of 3.4%. Now, to better make sense of that quicker inflation print in March, we have on the show Professor Ronilo Balbiran, economist at the University of Asia and the Pacific. Good morning, Prof. Balbiran. Thank you for joining us today.
Good morning. Always a pleasure.
Okay, sir, first your reaction on that inflation print for the month of March. How much of that is due to the spike in crude prices owing to the fact, of course, of the ongoing war in Ukraine, and how much of it is due to higher demand as restrictions loosen up?
Oh, well, I think a large part of it is part of the oil price increase because of the Russia-Ukraine crisis, probably around 30%, additional 30 to 40% because of that. No? So outside of the already expected increase in prices because of the surge in demand, because of the recovery of our economy.
are you seeing this to persist? And if so, for how long? Obviously, we don't have a crystal ball on how long this crisis might be lasting. But do you expect it to be a temporary issue or something that is quite worrying, especially after this print in March?
This is a temporary thing. In fact, no, we are seeing a price rollbacks way earlier than many have predicted. So therefore, we can see that the oil price, no, barring any additional escalation in the conflict, we are already seeing a steady decrease in the price of oil because of additional production of oil. And so therefore, this particular higher than expected inflation should normalize in the next 3 to 4 months. And therefore, we should be on our way on just a healthy pace of inflation, accommodative of economic growth, higher demand because of the recovery of our economy, and the additional spending due to the activities brought about by this election.
Okay, given, Prof, that you expect it to be quite temporary, at least the elevated inflation, do you expect this still to make a dent on growth on GDP levels? And will this in any way delay our economic rebound?
It might have delayed our economic recovery for 1 to 2 months, but I think the more important thing in terms of our GDP growth is actually the credibility of this election. If this particular election produces a president out of a very credible election, then this will be a very, very powerful combination of a recovery, a surge in the recovery of our economy, plus a higher consumer confidence that will really bring us back to higher levels of growth for the economy.
Sir, anecdotally, you mentioned consumer confidence. What did you observe in the month of March with these surging oil prices? Was the consumption heavily dented in this month, or was it offset by other people earning hopefully more year on year compared to 2021 simply because the economy is rebounding?
Yes, I think it was offset. And remember, before this March inflation, we were already experiencing lower prices in food. So this particular preparation towards the March inflation kind of softened the blow of high price of oil. And perhaps with so much circulation of money because of election, this may have actually been softened by increases in money circulation, availability of jobs, and we know that unemployment rate keeps on going down, and we've seen from the numbers in capital imports, PMI, Purchasing Managers Index. So we know that production is increasing, and therefore employment is also increasing, and we should see better numbers in the next couple of months, supporting a storyline of a quicker economic recovery.
Sir, can we do this without the Bangko Sentral raising their rates in step with the Fed? They have mentioned that it's not their job, it's not monetary policy's job to always arrest the prices of oil. It's the job of other sectors of the government to ensure that there's enough supply, etc., etc. But to what extent should they be acting preemptively to prevent possible second-round effects of inflation?
Yes, I agree with the position of BSP that you have to cure risks to very fast inflation where it's coming from. And in this particular case, it is actually driven by the oil price increases, which is a supply shock. So therefore, it must be cured on a supply shock driven approach, no? So and so therefore I understand BSP trying to push off their decision all the way to the fourth quarter of this year, just to see what will happen. And there are a lot of risks involved, and you don't want to dampen the recovery of the spirit of the consumers at this early stage, and you don't want to dampen the spirit of the investors, trying to recover, trying to just expand their businesses, to gamble for the future of our economy for the next 4 quarters. No, so it's very, very crucial that our BSP gets it right. No, I don't want to be in their shoes right now. No, so but you don't want to dampen this start of the recovery of our economy. And so I think it's not needed yet. No, it's not needed yet. I think they can reassess the situation after the second quarter. I think the more important thing right now is actually the recovery. No? So I think we can wait it off in terms of this inflation, and the futures price of oil is also going down. There are announced oil price rollback, and therefore the law of demand and supply will just kick in. So let's let the market be, and let's see what will happen, and let us support more. No, I think I have a bias for growth and employment rather than controlling this inflation. We can survive if we at this particular stage. My revised projection is around 4.4 to 4.6% for the full year of 2022, and still you can support a very high economic growth with that particular inflation number, and let the reduction in inflation happen towards 2023. I think it will be less than 4% by next year. So
Sorry, Prof,
so what?
just to interrupt, if it's 4.6% inflation full year, okay lang that the BSP keeps the rates at record lows until the end of the year?
This 4.6 is going to be beyond the BSP target.
I think it's okay. Because we have to allow there's this thing called sacrifice ratio, no? So you don't want to be so addicted to pushing inflation down, because the trade-off is economic growth, no? If we have an inflation environment of 4.4 to 4.6, and our economy grows at 8 to 9%, so what, no? So let's allow our economy to grow at 8 to 9%, and I think we can hit it if we have a credible election. We have our investment priced in. You mentioned in your newsreels that you have that the private sector, the investment sector is actually pushing for the implementing rules and regulations of these 3 key legislation. So that will actually boost a lot of investment for the year and for the next year. And therefore, I think it's more important to get our investments, investment confidence, business confidence, consumer confidence, allow this particular growth environment to persist. And then 4.5 is not so bad for inflation.
Okay, Prof. Balbiran, following your train of thought earlier, saying that, of course, inflation, it's better for us to arrest inflation through non-monetary measures. Question now is, are government efforts, non-monetary measures to be exact, enough to address the elevated levels of inflation here? We're talking about, of course, a lot of subsidies here, both for the transport and even the agricultural sector.
Yes, it's important now that the government, while these cannot be controlled in terms of the price of oil, there's a lot of things that the government can do in terms of, encouraging production increase. That's basic supply and demand. So if you are already foreseeing that demand is about to increase at a more than expected pace, no? It's important that the government encourages the supply side in terms of increases in the production. So making sure that the manufacturing sector is producing what is needed. Our build program does not come to a halt. so that we can continue increasing the productive capacity of our economy. So, and then a lot of this support, no, social safety nets, support for the consumption in relation to the impact of the price on household spending. So it's important that we match the support on production increase as we match the expected increase in demand. And that will soften the inflation both from the point of view of supply and the point of view of demand.
All right, again, thank you very much for those insights, Professor Ronilo Balbiran, economist over at the University of Asia and the Pacific. Thank you, sir. Now, coming right up, we'll check how the local bourse is performing this morning. That's on the back of the quicker inflation print in March.
More of that and other stories when Business World Live returns. Stay with us. Nyo lang.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, Dan, how is that inflation print moving stocks today?
All right, as you mentioned earlier on in the broadcast, Jess, the inflation for the month of March, 4%. That was higher than what analysts surveyed by Bloomberg were expecting, which was 3.7%. It's also higher than the 3% print that we saw in February. And you can see the slide that's happening, except, of course, for the mining and oil counter, which has been benefiting from those higher commodity and oil prices. But take a look at our composite. That's the PSEI. That's down 0.7%, around 7,115 this morning. Now, I'm going to take a step back, Jess, and just pull out for you several charts that I wanted you to see. First of all, the prices of Brent crude, and that is surging by 1.72 cents or dollars per barrel. And again, it's back up to 109.25. We had reported earlier on some fuel rollbacks might be happening, but then again, don't be too certain because we might actually be seeing another price hike sometime soon. Another one that I wanted to check out is the commodity index, and again, that is up by $1.6. That's around 125.56. So again, it's still on the rise. Not a lot of resolution when it comes to the commodity prices going up, even amid those talks between the Ukraine and Russia. And as I mentioned, the PSEI also not doing too well. And you can see a hodgepodge of the mixtures of which ones are dragging down the bourse. You can see SM Investments, JG Summit, all dragging down the bourse. The holding firms were the ones biggest hit this morning. And I did just want to take a quick peek at those sensitive industries to inflation, particularly the malls. Are people going to keep spending? Are people going to keep eating out with all the prices going up by 4%? Well, that remains to be seen. But as you can see, SM Prime already down by 1%. Mega World as well, which has a lot of malls, Ayala Land as well, hit here by that inflation print. And when you take a look at the food sector, the same seems to be the case. Max's, kakain pa rin ba ang mga tao sa Max? Well, it's down by 1.6% this morning. Jollibee enjoying some gains, but take a look at pizza. That is, of course, Shakey's. That is down by 2.9%. And finally, just one sector I wanted to watch out for here if that will pull out in my terminal, and that is the telco space. A couple of news strands there. We've got Globe Telecom expecting to book a 10.5 billion peso gain from their current data center. They've also gotten a new joint venture that is with ST Telemedia Global Data Centers and Ayala Corp. That's in Singapore. They are expecting more and more companies to be migrating to the cloud. Another one that is recording quite a lot of users, that is Smart, recording 42.6 million data users in 2021. That is up 11%. So very interesting place here. Globe inching up a touch, up by 0.08%. And PLDT, however, down to 1,810 centavos per share.
Here are the other headlines we're keeping our eyes on. The Customs Bureau collected a record 70.72 billion pesos in March, mainly due to higher imports and improved valuation. This is higher than the agency's 57 billion peso collection target for March. Last month's collection was also 29% higher than the 54 billion pesos collected in March 2021. The Bureau said 14 of the 17 collection districts were able to hit their monthly targets.
Now, following the easing of COVID-19 restrictions, the country has been seeing a steady increase in tourist arrivals. Now, since allowing the entry of all vaccinated foreign tourists last April 1st, international arrivals have been picking up to 15,000 daily. Foreign tourists now comprise almost 30% of the arrivals. And before the pandemic, South Korea was the country's top market, but this has since been taken over by the US and Australia due to the surge in COVID cases over in South Korea.
The Bangko Sentral is likely to raise its benchmark rate by a total of 75 basis points in the second half of 2022. That's according to the Mitsubishi UFJ Group, which attributes the potential rate hike to the expected economic rebound of the Philippines. The group said that the central bank would likely become more aggressive if inflation breaches the 4.3% full-year projection. The group also warned that the peso might continue to weaken due to risk aversion caused by the policy normalization of the U.S. Fed.
And speaking of the BSP, the central bank has appointed career central banker Eduardo Bobier as a new deputy governor of the corporate services sector. Bobier replaced former Deputy Gov. Maria Almasara Cid Tuanyo Amador, who had retired earlier. Now, before being appointed a deputy governor, Bobier used to head the BSP's controllership. Bobier has been with the central bank for the past 35 years.
In other news, the health department says the new Omicron XE variant is less infectious than the previous Omicron variant. In an interview with The Big Story, Health Undersecretary Leopoldo Vega said that those infected with this new COVID-19 variant in Thailand remained asymptomatic. But Vega emphasized that the government needs to come up with better vaccination strategies to encourage more Filipinos to get inoculated.
It has been reported that it's going to be transmissible, but less infectious. So we hope that this is going to be less lethal compared with the Delta. We need to come up with better strategies really for improving the vaccination of the citizens around, and not just doing it in vaccination centers, but really going out into the different houses and rural areas and identify them through the local government units. There is still a substantial number of booster doses being given, and that's only about 12 million of the population.
However, in an interview with 1PH's Sa Totoo Lang, National Task Force Special Advisor Ted Arbosa revealed that 27 million doses of COVID-19 vaccines in the country are nearing expiration, although Arbosa said that some of the shots could still have an extended shelf life. He also said that less than 1% of the COVID vaccines imported in the country have been wasted.
Alam ko less than 1%, mababa yung aming wastage. In fact, it's very low, one of the lowest. Kasi pagdating ng bakuna dito sa airport, we actually distribute them to the different parts of the Philippines. So, and then we expect the LGUs to be able to administer them to the citizens. So most of the time, meron lang silang tinatawag naming days to last, no? Talagang nailalabas nila.
All right, a new variant to be keeping an eye on, less lethal or not. The hope is that we get to prevent that from entering our borders. And that's a first look into the business day this Tuesday, April 5, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.